Okay, ladies and gents, good evening. Hello, Philip. Good evening, Francis. How's it, everybody? I see slowly but surely it's picking up. More people are joining us. Good evening, Philip. How's it, sir? Guys, girls, ladies, gentlemen, you all know by now how it works on a Wednesday evening. You pop some questions into the chat. I try and answer as many as I can. So let's rock and roll. Give me what you want to know about. Hello, Tandu and Gerard and Jonathan. Welcome, folks. Hello, Buba. Good evening. Pop in your questions with regards to financial advice. Let's see if I can help you guys. I can never give you direct financial advice. I can never tell you, listen, you have to take your money and invest it here or there, whatever, based on the concept that we run here with the Q&A. For the plain and simple reason that it's easy to tell somebody, take R1 million, invest it in this fund, invest it there, invest it, whatever the case might be. But the deciding where to invest somebody's money is always dependent on their personal circumstances. Not every person's personal circumstances are the same, and therefore, don't ask me, where must you invite your R1 million? Rather just give me a scenario, give me a question, and I will give you guidance as to what I think you can do. Hello, Siva. Hello, Sivjan. Good evening, folks. Marvin, how's it? And Gresham. Is it Gresham? Yes, it is Gresham. One of you are family of Tony Gresham. Any case, let's go. Rian, how's it? Good evening, sir. Hello, Raja. CJ, welcome. Food Daffel, good evening, sir. Welcome to our Wednesday night TikTok live. Mukhari, Farnes, people coming in and leaving again, but there's a few of you online, so just let me know if there's any questions. We start and we see what we can do for you guys. I see everybody is throwing out badges again. I don't know what badges are for. Okay, did you know TFA takes 13, wait, hang on a second, that was a bit fast. Philip, you say, did you know TFA takes you 13.89 years to 500k, after 12 years it can be doubled to 1 million. Yes, Philip, I actually do know that. The tax-free accounts that you're talking about, yes, it takes, and I'm glad you worked it out so correctly. I normally just say it's 13 to 14, 14 to 15 years, depending on contributions. That's how long it takes to actually contribute up to 500,000 into a tax-free savings account or tax-free savings investment. And yes, it could very easily double after 12 years. And depending on the type of investment you are in, and depending on the growth that you get on the specific portfolio that you choose, it could actually take less than 12 years to double your funds to R1 million. The important thing for me with regards to tax-free investments is you want to benefit from the tax-free growth that happens within the investment. So therefore, the people that gets the most out of tax-free investments and savings accounts are those people that not only make sure that they fill their 500k over a 14-year period, but those people who then leave the money in there for 20, 30, 40 years. Because now you will not only double your money in 12 years, as in your example, you are going to quadruple it, and you will get it to 2 million, 3 million rand, maybe even higher, the longer the period is. So you've put in 500,000, and let's for 1 second say that you've left it there for a period of 30 to 40 years, and it's grown to 4 million rand. It means that that full 3.5 million rand in capital growth that you've gotten there is all tax-free. If it was in any other investment, well, not any other investment, not in retirement annuities, if it was in any other investment such as unit trust investments or endowments, there would have been a tax implication. So you would not get 4 million rand out of another investment as you would out of a tax-free investment. And that's the beauty of tax-free investments. you get some relief and you get some benefits from SARS by not having to pay any form of tax. No capital gains tax, no interest, no dividends tax, absolutely no tax implication on your tax-free investment. So Philip, thank you very much for that comment, sir. I appreciate it. Let's see what is next year. Let's see who's next. Okay. Nalene. Thank you, Nalene. Yes, I am well, and I hope you are well as well. Let me see. Nalene is still there. Let's see who else. Conrad says 50K physical gold or investment. Conrad, my personal opinion, I will always go for the 50K in a normal investment. And the reason why I'm saying that is, over my years that I've been a financial advisor, I've had numerous clients who's bought gold Kruger coins, for example, and they've put it in their safe, and every time that we talk about it, when they want to go and sell it again, because remember, when you go and buy gold, physical gold, you do not pay 50K for it. You actually pay more for it, or you pay 50K and you get a bit less, because you're going to pay commission on that. You're going to pay fees on that. Absolutely. And then on the day that you sell it, then the same thing happens. Whoever is going to help you to sell it is going to want a certain amount of commission, or they're going to take off fees, or they're going to tell you that the gold price is down, whatever the case might be. You will never get, let's say you buy 50K worth of physical gold and it's 1 kilogram of gold. You will not, when you sell it, get the true value of 1 kilogram of gold. Because I'm not going to buy 1 kilogram of gold from you if, let's say, the gold price is 2,000 Rand per ounce. I'm not going to buy that gold from you at that price. I want to buy something that I feel can still grow, or that I buy at a better price. It's the same as selling a house. You can go and get your house evaluated, and they can tell you the value of your house is 3 million Rand. When you get offers, it's very seldom, very, very, very seldom, that somebody would actually offer you the full 3 million Rand. You're going to get offers of 2.7 and 2.5, or whatever the case might be, because everybody wants a bargain. So I've not come across one person that's actually sold their Kruger Rands for the true value as they perceive it and has received the true growth. And gold is volatile because it's very much linked to what happens in the world economy, what happens in world politics, etc. So I prefer to go with the investment. There's more diversification. There's a better chance that somebody like a portfolio manager could actually buy into a variety of shares and make sure that they keep the track of the market. And the nice thing about the investment is what you see is what you get. So you don't have a problem the day that you want to sell it, that the investment company or the investment house says to you, oh, well, sorry, there's 100,000 Rand in your investment, but we're only going to give you 85,000 Rand. That's what we offer you. They give you what's in there. So Conrad, I don't know if that makes 100% sense. And I'm not saying that gold is a bad investment. Please don't misunderstand me. It's the same as with properties. I'm not a big fan of property, but I'm not saying it's a bad investment. It's just not my preference. I don't like to go into gold or something like that. There's too many variables that makes me not want to be invested in that. Yvonne, good evening. Khan, good evening. Let's see who else is there. Oh, gee. And now we jump again from one thing to another. But don't worry, I'll get there. I'll get there. There we go. Just want to see if I skip somebody. There we go. So far, so good. Nalene, if I sell my house, how much goes to the taxman? So, Nalene, if this is your primary property, we do not pay capital gains tax on private property unless the capital gain that we make on that is more than 2 million Rand. It used to be that your private or your primary residence never attracts any capital gains tax, and it was only your second and third and fourth properties that attracted capital gains tax. Now, these days, your primary property also doesn't attract capital gains tax unless it goes over that limit. And I speak under the correction, but as far as I know, it is a profit of more than 2 million rand. But now you have to take into consideration, if you bought a house for 2 million rand and then you're going to sell it for 4 million rand, that is not the capital gain. The 2 million is not the capital gain, because any repairs that you've made to the house, any painting, anything that you can prove that you have laid out extra money, gets deducted. So you bought your house for 2 million rand, you spend 1 million rand over your lifetime on fixing it, so it's 3 million, you sell it for 4 million. The actual capital gain is therefore 1 million rand, so there's no capital gains tax. It's only once all of those deductions have been made and then your profit is more than 2 million that you will have a capital gains tax implication. But for all intents and purposes and for all kind of practical reasons, the actual capital gains is only really of relevance on second and third and fourth properties, okay? And of course, up to how many ever properties you have. I hope that gives you a better understanding then, Aline. So let's see what else we've got here. I see TikTok wants me to invite people to be live guests. I've tried it once or twice and nothing happened. So maybe I'm just not smart enough to handle this. Let's see. Tracy, Big Wise, Nico, Mighty Chicken. Mighty Chicken. Good evening, Mighty Chicken. Let's just, folks, I'm just trying to scroll through here to see what is the next question here. Oh, seems like everybody has got this long weekend mode in them, because everybody is joining, but not many people are asking anything. Philip, can tax-free account interest be moved to another bank account monthly as an income? Yes, you can. Absolutely, Philip. But you say as a monthly income? Yes. Let's just stop it there. Can tax-free save interest being moved to another bank account monthly as an income? Yes, it can be done. It's obviously something that you most probably will have to do on a manual basis. Unless if you make use of a tax-free savings account with a bank, unless you actually ask them to move that interest across on a monthly basis. But then you're not going to get the benefit of compound growth, Philip. So that's not lekker. The idea with the tax-free investment is to get the compound growth. That means if you get 100 Rand every month as interest or growth on your investment, at the end of the year, there's 1,200 Rand in there. Now, next year, you get growth not on your 36,000. You now get growth on the 36,000 plus the 1,200. So now you get on your 1,200, you get another 120 Rand growth. So that is the beauty of a tax-free investment, is the compound growth, and all the growth is tax-free. So you can do it, Philip, but it's not advisable, especially if you want to see your investment grow big time. Thanks, Conrad. Wayne. Yes, Wayne, I'm well. Thank you very much, sir. Welcome to our show. Nalene says, thanks, it cost 1.5 million to build. Well, there you go, Nalene. So from that 1.5 million, you must just now go and calculate what the actual sale price is going to be. And then if that sale price is going to be 3.5 or less, no capital gains tax. If it's more, then you might have to pay some capital gains tax. But remember, then you still have your rebate of 40,000 Rand on whatever the capital gain is above the 3.5 million. So you actually get a little bit more grace there. So, Nalene, all depends on the total situation from the day that you started building until the day that you actually sell. Oh, and there we do it again. I love this. Let's see. How's it, M&M? Nice to see you back, China. Is Berkshire Hathaway shares good for diversification in your portfolio? Charlene, my dear lady, I wish I could tell you. You have just asked about that. Somebody else asked me about Peregrine Capital. I have to go and research these things. So, Charlene, just to tell you why I have to go and research it. In South Africa alone, we have more than 2,000 different unit trusts. Okay. Then if we go and we look at the amount of portfolios that's out there, you're going to find that there's most probably close on 2,000 portfolios as well. Then we have to go and we have to look at all the investment companies that's out there. Now, there are hordes of them. So I don't know everybody and I don't know everything. And Berkshire Hathaway that you've mentioned here is one that I don't know. So I will have to go and check it out before I can give you an answer. Just the same as with the gentleman that asked me about Peregrine Capital. I've never heard of them. I've only just heard of them today. I'd love to go and do the research and tell you, but it's going to be a bit difficult to try and talk to you guys and give you some feedback and at the same time do it. So Charlene, pop me a message on the WhatsApp in my profile with this specific question. I'll go and do a bit of research and I'll give you my opinion afterwards, okay? Christian sê, ek hoop jy sal my kan advies gee oor 15 jaar, pensioen is nog ver. Christian, Christian, I'm going to switch over to English, okay? It's just so that everybody can understand. That's the general language. So Christian, here's the thing, mate. It's wonderful if I'm still here over 15 years, and trust me, I intend being here in 15 years' time. But for you to make sure that your retirement in 15 years is going to be a good one, you need advice now. It doesn't help to... It's fantastic. If you've got a pension fund or a provident fund at work, or you're contributing to your own personal investments, it's all fine and dandy if you do that. But if you want to do proper planning, if you want to make sure that you're going to be okay in 15 years' time, the time is now to do the advice and to do the planning. Because at this stage, what you are doing, where you are in terms of your assets and liabilities, where you are in terms of your income and expenditure, where you are in terms of your family unit and what your needs are for them into the future. Planning around that as to what you need to do to get to your goal in 15 years, that's what's important now. If you do that now, and you follow the advice or the planning and it is structured for you and you do a review of that on a yearly basis, that is when you won't even have to worry by the time we get into 15 years from now, whether you're going to have enough or not. If you do that planning and you review it on a yearly basis, I promise you, if you can keep up with the plan that you and your advisor jointly plan on and does that, you will be okay. So, Christian, my advice to you, mate, don't wait for 15 years. Do the planning now. Only RC. Yes, the dinner that my wife is making is pretty nice, I must say. I'm sitting here and I'm smelling it. And I think that's why I keep on wiping my mouth. I'm already drooling, mate. Oopsie, there we go again. Same thing happened. Can you invest in a tax-free DIFT deposit in 1 year and the next year, say, in a unit trust? No one? Okay, your question is basically, can you invest in a tax-free investment of one sort now, and next year another one, and year after that another one? Yes, you can indeed. Absolutely up to you. So you even have the choice. You can invest in a tax-free investment this year, next year take up a new investment, the year after that another one, and so have different tax-free investments going forward until you filled up your 500,000. Or you can take your money, invest it now, then move it over across in the next year to the other tax-free plan, and then carry on from that one and always have one tax-free investment. I will not advise people to actually jump around, because in jumping around, all you're trying to do is you're trying to time the market. And it's been proven over and over and over and over again, hundreds of times, that people trying to time the market never wins. It's what we call is time in the market. People that start investing and investing for a long time in a specific investment are always better off than people that try and say, okay, this investment is doing the best now, then that investment is doing the best. It's just been proven. It's because we cannot predict the market. And there's a thing called Rand, just as I want to say it, I lose it. But basically it comes to it that if you buy into an investment now at 1,000 Rand, you might be buying 10 units at 100 Rand a unit. And as the market goes down on that investment, you should actually be putting more money into that investment, because your next 1,000 Rand, if the market has dropped by 50%, is going to give you 20 units instead of 10 units. So now when the market picks up, your 10 units just goes up from 1,000 Rand to 1,100 Rand, but your 20 units goes up double that, because you've got more units that grows. So, can do it, not advisable. Hi there, Danai Bauer. Danai Bauer and Cornay Bauer jointly on a thing here. Die markte is weer op. Yes, Bons Marafontein, everybody was so panicked about the markets and what Donald Trump said, and what, it was 5 days, 6 days? Once again, folks, that's why when you do investments, you must do it for a long period of time. And don't worry about the in-betweens. All that anybody should ever be worried about in investment is, when I start, I want to start at this point, and when I get my money, I want it to be at that point. Whatever happens between this point and that point should be absolutely irrelevant to you, because you're going to have the downs, the ups, the downs, the ups. That's not important. As long as you start here and you end there, you will win. Don't worry about the markets going up and down. What's next year? Bons Marafontein says, Peregrine's got great hedge funds. Yes, Peregrine, I opened a little page and I saw here that they're showing the hedge fund, and it shows that since inception, it's 18.78%, and they've got a high growth fund that since inception, 22.8%. I actually want to go and see the fund fact sheets, and I want to see how long these funds has been running, because it's very easy for portfolio managers to get a great return over a short period of time. It's much more difficult to keep consistent good growth over a long period of time. What are your thoughts, only RC? What are your thoughts on the dollar and global equity market? Is there more volatility to come? I don't know. You're not going to believe this, but I don't really care. And the reason why I'm saying, only RC, that I don't really care is precisely for what I said now. When you do investments, you must do investments with a certain time frame in mind. And whether your time frame is 5 years or 10 years or 15 years, what you should be concerned about is, when I start here, where am I going to end there? The only people that should be concerned about what the dollar is going to do and what global equity markets are going to do are those people that are trying to do big profits on short term. So there we're talking about people that does foreign exchange, or plays in the foreign exchange market. There we're talking about people that buy and sell shares on a daily basis. So that's for the short-term investor that has to worry about that. If you are a long-term investor and you want to build wealth, don't worry about it, mate. We just can never say. And quite frankly, even if there is more volatility in the market, it just opens up opportunities for investors that are willing to stick around and be in the market for a long period of time. Okay, let's see what's next. And what's my thoughts on Trump 2.0? Good for us in the long run? I love Trump. I am very glad that Trump has come in. So let's talk quickly about Trump and the tariffs or taxes that he's imposing. So basically, when you want to do business with another country, that country charges you a fee to do business with them. So when you do exports to them, they say, okay, you can export your stuff to us, but we're going to charge you 10%. And that 10% is going to the government, and they're going to use it to run the country. So basically what our friend Trump has now done is he said, listen, yeah, we as America are doing business with a lot of different countries. But country A, you are charging us as America 30% on the goods that we export to you. But the goods that we import from you, that we get from you, we are just charging you 10%. So all we're doing now is we're leveling the playing field a bit more, and we are going to put your fees up to say 20 or 25%. That's all he's done. He's leveled the playing field. So now the stuff that is being imported into America is going to be more expensive. And now it's going to make the Americans want to buy local stuff because it should be a bit more affordable. The second thing is, especially for South Africa, how much is our export to America? 8% of our total export goes to America. So 92% of South Africans' export goes to China, Europe, UK, whatever the case might be. So it's going to have a much smaller impact in South Africa than what we're thinking. So on an economic front, yes, there's going to be a small impact, but I'm not too worried about it. What I'm more happy about with Trump is that he's attacking all the senselessness that's happening in the world. LGBTQ that he's now addressing and saying, listen, there's men and women and that's what it is. There's no Bible reading and religion allowed in the schools. I want it back because I believe the whole world craves more to be closer to God. So yes, for me personally, I am a big fan of Trump. I know the man is full of himself. I know he thinks that the sun shines out of his never regions, but he's doing the right stuff. He's doing what nobody else has the guts to do. So I'm all for Trump. And yeah, I know there's people that won't agree, but that's me. I am really a Trump supporter or Trump fan. Let's call it that. I can't be a supporter because I can't vote for the man. So I'm just a Trump supporter. So let's see. Now it's running quick, yeah? Okay, what is the risk difference between government bonds and retail bonds? M&M, government bonds are offered by government, retail bonds are offered by companies. That's the difference. So who do you trust more is almost what I want to say. Do you think that government can always repay what they promise you in a bond? Or do you think that that companies that offers bond can pay everything back? And that's the plain and simple thing about it. So I don't think there's a lot of difference between the two. I don't like bonds as is because it's interest and you have to pay tax on it. There's much better ways of investing your money. Isn't there a limit of 3,600 per year? Victor, you talk about tax-free savings. It's 36,000 per year, mate. It's a limit of 3,000 per month or 36,000 per year. Not 3,600, okay? Good idea to invest your full pension as an income. I don't need the third. Philip, this is quite an interesting one, okay? Because this is going to depend on the actual pension that you then receive. And what I'm saying with this is, and once again, I'm not going to grab out my little tax booklet here, so I'm just going to throw a couple of figures out there. But let's say, okay, that if you take your full pension, your full capital, and you draw an income, and it's going to give you 30,000 Rand a month, and that makes it a 360,000 Rand per year income, and now it puts you in, let's say, a 31% tax bracket. Then you know, okay, I'm going to pay 31% on that. But now, if you go and you take your 1/3, okay, and the 2/3 now gives you a 20,000 Rand a month income, 240,000. Let's say that's a 26% tax rate. Now you're paying 5% less tax because you are getting a smaller income. So that's a win. So now the second portion of the exercise is to go and say, okay, if I take my full 1/3 and I go and calculate what the tax is that I pay on that, because remember, you're only getting the 550,000 tax free, and then the sliding scale. So once you go and do that full sum, and once you've done that and you see, okay, my 1/3, if I draw everything, then I'm going to pay on that, let's say, again, 26%. Then it's still a win because your 1/3, as well as the pension you're going to get, is going to be taxed at 26%, while the full 3/3 would have been taxed at 31%. Now, if you take that 1/3, you say, okay, but I need an income from it. Now you can make use of different investments. And you can go and put the money into those investments, and a big amount of it can be tax-free, up to 90% in some of the income plans that we use. Now, if you add that 10% to your 20,000 Rand, you should still be on that 26% tax bracket. So it then makes sense, just from a tax perspective, to actually take your 1/3, do certain investments, get an income from it on the one side, virtually tax-free, get income from the two-thirds, taxable, but pay lower tax, and then you've got your 1/3 available. If you've done this whole exercise, and you will actually, it's not going to influence your tax situation if you take the full 3/3 as an income, well, then it's not a problem. But more often than not, Philip, it is actually beneficial to the client to take his 1/3 or a portion of his 1/3. I hope that helps you, Philip. It's all in the planning. It's all in the numbers at the end of the day. Rand cost averaging. There we go. Thanks, Bosmara Fontaine. Yeah, you see, that's the answer. I don't know why I always forget that rand cost averaging. And I've got an idea, Mr. Bosmara Fontaine, that you are very financially savvy or you are a financial advisor. Maybe you should call me so we can have a chat. Nalene says, if I retire in one pension fund and am not happy, can I move to another? Consequences. Okay, so Nalene, if you retire from a pension fund and you take a guaranteed life annuity, okay, you're stuck. Can't move, it's over and done, that's it. If you, however, invest your money in a living annuity and you are not happy with that living annuity, then you can move it to a different living annuity with a different company. You can even then move it from a living annuity to a guaranteed life annuity. So there are options. And it's just going to depend on the type of income plan or income fund, pension income that you take in retirement as to which one you're going to choose. Sometimes, and I've done it a number of times in my life, it's just better to go with a guaranteed income. But it's all dependent on what happens and the type of product that you take at retirement. McLee, want to move into security complex, need to sell my house. Is this a good idea? McLee, I honestly can't tell you if it's a good idea. I don't know where you stay. I don't know what you're going to get for your house. I don't know what you're going to pay for the secure complex. I don't know how secure it's going to be. So I honestly can't tell you, Mark Lee, if it's a good idea or not. I think on a decision like that is one going to have to look at the financial implication. How much am I selling my house for? How much is the new place in the complex going to be? What is the levies going to be? Does all those financial things make sense? And then a very important factor is peace of mind. If I do this, will I have more peace of mind living in the security complex than what I'm having in living in my house or not? Now, for myself, speaking for myself, here where I'm staying, I love it. So, and I don't like neighbors close to me. I don't like to be in a complex where my neighbor is 1 meter or 2 meters away from me or we share a wall. So personally, I do not ever want to move into a security complex because my personal preference is I like my house, which is reasonably far away from my neighbors. And therefore, I don't have to worry if I put on my music and I want to listen to it at 100 decibels, nobody else is going to complain. So it depends on yourself. So that peace of mind factor, very important. For the rest of it, it's all in the numbers. It's all in the financial calculations that you do to see whether it is a good move or a bad move, whether it's affordable, not affordable, whether the financial impact into the future is going to be okay or whether it's going to be too harsh. Hello, Yapi. I am doing well, thank you, sir. Danae, people that want high growth but high risk should venture into Signia, Fang, AI, and FOF Industrial. Danae, if you say so, absolutely, then I suppose it's good. Signia has got good funds. I've seen some of their performances. And yes, if it's funds that are doing well, then absolutely. I haven't studied these specific funds of theirs in depth, so I will not argue with you. I'll just accept that what you're saying is the truth. Nalene says, when I retire 3 months, gonna learn and try Forex, daily investment too old for long. Nalene, go for it. For me, you know what? I could have gone into Forex a long time ago. I could have gone into shares a long time ago. I could have done all of this stuff. The thing for me is it just doesn't interest me. It interests me from a financial point of view that I need to understand the basics of it so that I can explain to people what Forex is, what share trading is, etc., etc. But the research and figures and spreadsheets and graphs and everything like that that goes with what needs to be done in order to become a successful Forex trader or a successful share trader, that does not interest me. That's the one thing. The second thing is, I do not like gambling, and buying Forex or doing Forex or shares to me is to a certain extent like gambling. Because when you do whatever you buy, if you're buying rand versus pound because you believe that the rand is going to strengthen and then you're going to make more out of it, or vice versa, you are gambling that the market is going to go with you. And if the market doesn't go with you, then you actually take a bit of losses. I don't like that part. I really don't like. That's why I don't go to casinos. I don't go and gamble, because to me, there's nothing exciting about putting money in somewhere and then suddenly have a loss. And yes, if you do any of these things, if you get more wins than losses, that's the intention, and that's lekker. But I don't want to sit on a daily basis and see wins and losses or whatever. I just want to put my money somewhere, get somebody that's professional, that understands the market better than me, to invest my money and to run it for me. And that's what I like to do. So I put my money into these portfolios. I forget about it. Every month my bucks go in there. Every 6 months I have a look and I go, yeah, that looks lekker. Thank you very much. We get something like COVID where the market suddenly crashes. I just don't look at my investment. And I wait until I see the market has recovered. Then I go and look and I go, hey, fantastic investments. So absolutely, Nalene, if you want to go and do it, do it. It's just not something I like to do. And Nalene, can I tell you, I've had numerous clients that asked me to do Forex and share trading. And then I said, no, I'm not going to do it. And then they start doing it because now they're going to make lots of money. And the first time I see them, they just tell me how much money they're making. And then 6 months or 12 months later, when I ask them how it's going with their trading, they're like, no, I didn't have time for this. I didn't enjoy it. No, this, that. It's all talk for, I lost money and it wasn't lekker. Hallelujah. Thanks, Frikkie. Let's see who's next here. Ali. Hi, if I want to invest through you, what is your commission? Ali, how can you ask me that, brother? I take lots of money, China. Ali, now I'm joking with you, okay? So I ask a standard of 1% upfront. That is my 1% upfront fee. And then I ask a 0.5% ongoing fee. So the reason why I'm asking the 1% upfront is because the initial planning and advice and everything that goes into it is a hell of a lot of work. At this stage, I ask 1,000 Rand consultation fee for people for a first consultation. And then I automatically give them a follow-up consultation. So I spend 2 hours with them in consultations alone. And then I have to go and do the planning, and I have to get the policy information. I have to go and do analysis. And that takes another 2 hours often per client. So just for the initial planning, and this is if it's straightforward. There's clients that I have dealt with for the last 6 months that still hasn't invested with me, but that we are ongoing. So you know what? It's a lot of hard work. So I ask 1% for that as my upfront fee. And then ongoing, because now I have to review, I have to check your portfolio, I have to give you feedback on an ongoing basis, I take 0.5% for that. So yes, I can always cut my commission and my fees, but that I will negotiate with the client under specific and very strict give and take, if I can call it that, agreements. Boss Mara, yeah, I am a young advisor. I thought so, mate. I thought so. So come and talk to this old topic. I'd love to know who you are with and what you are doing. Nalene, apparently I'm on the 41% tax bracket. Okay. Is it more beneficial to take my 1/3? It's most probably going to be, Nalene, because the first 550,000 is going to be tax free. Then 18%, then 27%, then 36%, and that's the maximum tax bracket. So if you take your 1/3, you're already going to pay less tax on that than what you are paying currently as a salary earner. And then we go back to the calculation that I explained to Philip a bit earlier. Then we look at your 2/3 and what you're going to get there. So let's say on your 2/3 you're going to get an income, and now you're going to drop to a 31% tax bracket. So then there's a little bit of wiggle room for one to look at and say, okay, well, my 2/3 is going to give me, going to put me in a 31% tax bracket. If I take the full 1/3, a certain portion is going to be 36%. Now that portion is going to be 36% tax. If I throw it over to the 2/3 side and I get an income, how's that going to impact? And if we see, listen here, this portion I'm going to pay 36% on. If I put it with my 2/3, I draw an income, I'm still going to be on a 31% tax bracket, then it actually makes sense to take everything up to the point where you're paying 31% tax and leave the rest there. So I'm not saying that the full 1/3 should be taken, but I'm saying that a large portion of it, in your case, Nalene, I believe should be taken. Okay. Corneille, you're going to be a busy man when I'm on pension. A lot to plan. Come, Philip, come. I enjoy it, brother. I enjoy it. If need be, I'll put out half a day for you, and we sit and we talk and we run through everything. And then I charge you a lot of money, Philip. Bosmara at Danaibar. Only problem is the FANG is closed at the moment, unfortunately. Yes, see, Bosmara, you and Danai, and I know Danai is also a financial advisor. You guys know a lot of stuff that I don't know. Maybe we should talk. Maybe there's something I can teach you, because you're definitely teaching me. Danai, 1% upfront, 0.5% going is very reasonable. Thank you very much, Danai. I appreciate that. You obviously understand how our commission structures work. So yes, sir, I feel it's very reasonable. Yeah, let's just stop there. Okay, then next. What do you think of SARS not adjusting tax brackets in 2 years in a row? Bunch of snakes. Fayyad, you know what? I can't see that SARS can actually adjust their tax brackets. If you look at our situation in South Africa, in terms of where SARS can actually get tax from. I mean, go and look at it. We're 65 million South Africans, and I think SARS can only collect tax from about 4 million, I think it's 4 million individuals. So you've only got a very small percentage of individuals that's actually paying tax. The rest of their tax and that they get is from company tax and CGT and all of that stuff. Now you go and look at what is being created with regards to SASSA and grants and this, that, the other. I don't think SARS can actually afford to adjust tax brackets. I also think it's because of this catch-22 that they've created for themselves, government/SARS, that they have now increased the VAT this year. But having said that, for you, if you go and have a look at what the tax brackets is for Americans, then we as South Africans, we still shop. We're not paying too much tax. Yes, I know there's countries in the world where there's no tax payable, but if you look at your average country, so to speak, and remember, we are seen as a third world country, where America is a first world country. If you compare our tax brackets, man, we are so much better off in South Africa than in America. Now, that's only talking about tax. You start talking about food and what you pay for a steak over there and a steak here, what you pay for a beer over there and a beer here. Europe, the same. Don't worry about them being a bunch of snakes. We are still much better off. Trust me. I've got a number of friends and clients that stays internationally. Man, They always tell you how wonderful it is, how great it is. And the moment you start talking about the cost of living, then they start crying because they cannot even afford to buy a piece of boerewors to buy on a Saturday. It's just too expensive. So don't worry about the tax. We are still okay. Even though it feels like we're being overtaxed, we're still okay. 1% of all the money I want to invest. So if you invest only 1% of all your money, you're never going to be able to retire. It's as easy as that. You're not going to be able to retire. You need to invest at least 10 to 15%. And if you start at a very young age, 10% is going to be good. If you start a bit later, 15% is going to be needed. In most cases, people only really start paying attention to the investments from the age of 30, 35. And then by that time, because they haven't invested for a long time, they have to start investing 20, 25, 30% of the income. So, Madunam, sorry to say, mate, if you're only going to invest 1%, you're in for a very, very difficult time into the future. Danai says, otherwise, Signia forfeit astral fund, but most of them, okay, gents, you must definitely make contact with me and then we can talk about these funds. Nailene says, brilliant stuff. Oh, thank you, Nailene. I appreciate the comment. Where was, oops, sorry folks, the finger problem here. Any advice on purchasing a first home? Yes. My advice would be try and save up enough money to have one big deposit. That's the first thing. Or enough to actually buy the house cash. Second piece of advice is buy a house that you can afford and that is small enough for you to stay in. Don't go and buy a 4 or 5 or 6 bedroom house if it's just you. Go and buy a 2-bedroom place. Pay it off. Get it over and done with. Make sure that you've got an asset that is debt-free. Then you can go and buy a second property with 3 bedrooms. Then you do the same. Then you buy the 4th property. Or, no, I'm not meaning you buy extra properties. I mean you sell your 2-bedroom property and you buy a 3-bedroom property. Then you sell your 3-bedroom and you buy and build yourself up. So that would be my advice. Number 1, have a big deposit or pay it cash. Buy small. You don't have to impress anybody. If you're young and you want to impress somebody, you're cutting your own nose and spiting your own face. 10 years down the line, nobody is going to remember the fact that you stayed in a bachelor's flat or 1 bedroom, whatever the case might be. So start small, make sure it's affordable, pay it off as quick as possible. That would be my advice. Okay, those two guys are still talking about the Signia funds. Okay, yeah. Kuran, do you guys know the Liberty Exact Income Fund? I don't understand it. Bosmara, I'm going to have to look at that one. I don't want to say this. I might upset Liberty. I'm not a big fan of Liberty funds. There, I've said it. There's some companies' funds that I really like. There's some companies' funds that I don't like. Liberty, I think, is a great company. I'm just not the biggest fan of their funds and portfolios. But what you get paying tax, nothing. Still have to pay school fees and medical aids. Arun, I know that, mate. You are paying tax for the roads that we have. Yes, I know they've got potholes, but you can drive from Joburg to Cape Town, from Cape Town to PE, from PE to Durban on a highway. It pays for that. It pays for the police. I know that people are complaining that the police are not doing their job, but trust me, when you are in trouble, that's who you seek, that's who you phone. It pays for state hospitals. I know nobody wants to go to a state hospital, but trust me, if you've got no other choice, you're going to go there. It pays for state schools. I know everybody wants to send their kids to private schools because they want to have their kids in a small classroom with 10 or 15 people. But if you don't have any other choice, you're going to send your kid to a state school. And so we can carry on and on and on and on and on. Yes, maybe we feel that the tax that we are paying is too much for what we get, but we are still getting services. So I'm sorry, Arun, I do not agree with people that is so completely against tax. If we did not pay tax, who is going to build that road? Who is going to fund that teacher that works for the government school? Who is going to pay for that doctor that works in the government hospital? If we don't pay tax, who's going to do all of that stuff? So even the Bible says, God said, pay to betaal die keizer wat die keizer toekom. Pay your taxes. It says so in the Bible. It's a biblical principle. Man, my honest thing is with people, educate yourself, grow yourself personally, learn more skills, make more money, and then you won't worry about the tax. That's as easy as it is. Angry Balance Fund. Okay. Danai and Bos Mara Fontaine. Gentlemen, please, you are sitting here and you are listening to me and you're having a fat chat. Do me a favor. Go onto that WhatsApp of mine. I want to give you the number, but every time I put my number on TikTok or my email address, they block me, they cancel me. On the live that I did the one time, I tried to put it on, they killed my live, and then I couldn't do a live for about a week. So please just go to my profile, check the WhatsApp number, send me a WhatsApp. Let's get together. Even if get together means we do a Teams meeting with a coffee. I would love to chat to the two of you. Okay. See, we are running out of time here, but let's see how many can we still push through here. Thami, I always benefit from your platform. I really appreciate it. Oh, pleasure, Thami. I'm glad. That's the intention, has been right from the start, to add value to people's lives and help them to be educated. New house start with a flexi loan. You will have capital flexible for improvements. Very true. Flip it. About to resign from work and my provident fund is 1.5 million. I want to go for property investment advisable. Flip it. You're asking the wrong man, because I'm not a property fan. So if you're asking me, no, I don't think it's a good idea. On your 1.5 million rand, you're going to get 27,500 tax free, and the rest is going to be taxable. You are going to pay a shite load of tax. So let's say you are left, let's say they just take 200,000 rand to tax. You're left with 1.3 million. Now you want to buy 4 properties for 1.3 million. I don't know where you're going to buy 4 properties for 1.3 million, but let's say you do. Now you have to put in renters there. And then you have to collect your rent, and you have to hope that they don't break down the place and this, that. So what you actually do is you're creating a new business for yourself, with all the headaches that comes with business. So here's my question. Do you know how to run property? Do you know how to manage property? It's very easy for people to say, I'm going to buy a property and rent it out, or I'm going to start a business and start making money. If you don't know how to do it, then I advise you strongly, first go and learn. First go and educate yourself. So you take your 1.5 million, you move it to a preservation fund so that there's no tax involvement or anything like that. You park it there, you let it grow, you educate yourself in property, you look at all the pros and the cons, then you decide, listen, do I like the pros and the cons? And then once you feel that you are educated enough, then maybe you go this route. Same with business. So flip it, man. Listen to me. Don't go and do this without thinking it through properly. I have seen so many people over the years that take money from pension and provident funds to start business or whatever. You know how many of them have succeeded? 0. So now those same people that were 40, 45, and then took their money and then went into their own little business, whatever, they have to start again. It is heartbreaking to see somebody that's been working for a company for 15, 20 years, build up their pension, use it, lose it, and have to start again. So I won't advise you to do it, flip it. Mr. T, if I take early pension, earning about 400,000, will my child qualify for NSFAS? I don't know. So I talk a bit about tax, and I talk about government, and I talk about the tax implications, but I honestly don't know about the grants because I don't deal with them. So Mr. T, I suggest that you actually go and research this, okay? Go and check it out for yourself. I'm sure you can Google it and you will find out if you can or not. Bosmara Fontaine, Liberty is going to take us out, China. Can you get income on investment before retirement? Is there a specific product that allows that? Yes, there is. If you have unit trust, if you have an endowment, if you have a bank savings account, and there's numerous others, but let's look at those three. If you invest money into any of those investments, and at any stage, doesn't matter how old you are, you say, okay, I want to start taking an income, whether you're just going to take the growth, just the interest, or whether you're going to draw a portion of the capital, that's your income. So yes, you can use a variety of products to build up capital, and then when you feel like it, start drawing an income from it. So absolutely, no problem. What more can I do to secure my children's financial future? I've got a tax-free savings account. Okay, you really want to do something, Nolo? You go and take out a retirement annuity for your children. That's what you do. Because if you take out a retirement annuity and you pay that retirement annuity now, even if you stop paying it when your child reaches the age of 18 or 20 or 21, that child can't touch it until the age of 55. But the growth that that child is going to get because you started so early in life is going to be extraordinary. So when your child gets to the age of 55, irrespective whether they had a pension and provident fund or have their own whatever, they're going to have money. So that's the first thing. You can do a retirement annuity. Second thing is make sure that your will is properly drafted, so that if something happens to you, that you know that your kids will be looked after. Okay. Create that legacy by making sure that your will says what your kids can get, whether it must be looked after in trust, etc. So tax-free savings is great. Retirement annuities is great. Any other form of investment absolutely is great. There's a lot you can do. It all depends on what you see as securing your child's future, financial future. But for me, I'd say those three things. You've got the tax-free, do the retirement annuity, make sure that your will is in place. And then if you want to do extra, look at an endowment or buying shares or something to that effect. Can you suggest some good companies to manage one's pension fund? I was thinking PSG and Investec. Naileen, I'm going to step on toes here. And when I say I'm going to step on toes, I don't think PSG is as good as they used to be, but they are good. There's a lot of companies really that are good. I've got one or two companies that I prefer using. And I'm going to be honest, I prefer using Old Mutual because I like their funds, because their management cost is low. Sanlam, I think, is a very good company also to make use of that. Marriott, I think Marriott is really good as well when it comes to that. So there's a number of companies to manage your pension fund. I would now assume, Naileen, you are talking about your pension fund that you're going to get at retirement and put it in there. So here's the one thing I can tell you is when you get to that actual retirement age and you have to make your decisions, at that point, a very big factor that should come into play is if you're going to take a guaranteed life annuity, to look at the company that gives you the best and the highest guarantees. So then it could be anybody. Then it could be any of the companies, whoever's got the best rates is then the company that you should go to. But Naileen, yeah, there's so many good companies out there. And as much as I may say, listen, yeah, I'm not a biggest fan of PSG, or I'm not a biggest fan of Liberty, or whatever the case might be, you're going to find hundreds of other people that's going to tell you why these companies are, again, much better than, say, Old Mutual or Sanlam or Marriott. We all to our own. It's the same as driving cars. I might love BMW, and I'll tell you all reasons why I love them. You might hate them and go with Mercedes-Benz or Toyota. We all have our preferences, and trust me, you're not going to go far wrong by choosing any of the recognized companies. That's the important part. Any of the recognized companies, and you should be okay. Oh, listen, folks, I was wondering why this thing is giving me all these warnings. I'm past my 1 hour limit. Okay, let's do a quick one. I'm going to run through a couple of quick ones, and then I'm out of here. I'm 62. Would it be advantageous to cancel the cover and use those funds? Old man again. Tell you what, if you don't need the life cover, yeah, then absolutely you can cancel it, you can use it. But if you've got children or grandchildren, go and speak to them to take over your life cover and to pay the premiums on your behalf. Make them the beneficiaries. Best investment that they can ever do is to take over your life policy. And depending on the people that you know, I'm sure if you talk to people about this, you're going to find a number of family members, friends, colleagues, whatever, that if you pitch this to them, they're going to say, I'll take it over. I'll pay it. So yeah, somebody will benefit from your death in such a situation. But especially for children and grandchildren, if you rather cede the policy to them, let them pay the premiums, make them the beneficiary, man, there is no better investment that you can give them. Okay, let's see. Corey, can you only invest? Corey, are you only an investment specialist or risk as well? Danae, as a matter of fact, I do the holistic thing, mate. So estate planning, disability planning, severe illness, and investments. It just so happens that since I started this social media channel of mine, and since I started doing the videos, I'm getting more and more questions on investments. So my investment speciality has grown substantially. But now I like to look at the holistic situation of clients and small businesses and so on. It just so happens that investments is the thing that's coming through more and more, and where I can see that there's a bigger need in South Africa. I think that is that. Yapi, opinion on FNB stock investments account. I don't have an opinion, Yapi, because I don't do stock investments and I don't know FNB stock investment account. Like I said a bit earlier, there's so many funds, so many options. It's impossible for anybody to know everything about everything. And if anybody tells you that they do, they're lying to you. It's as easy as that. So this is one of those things, Yapi. If you want me to go and check it out, you're welcome to pop me a message on the WhatsApp number in my profile. And I'll go and check it out and I'll give you an opinion. But for now, I can't tell you anything. Tiesak, where are you from? I'm in Krugersdorp, mate. What is endowment? An endowment is a life investment. It is a product that you invest money into for a certain period of time, anything from 5 years and longer. Inside the endowment, they've got portfolios. A portfolio manager runs it for you. He sorts out the tax. And then when you get to the point that you want to take the money, you can take the money out of there tax-free, whether you take it as a single amount or as a recurring income, all the same. Okay. Ladies and gents, I'm going to say to you, there's 5 more messages. Thank you, Kunai. Open my eyes. I'll take an opportunity. Lynn. Thank you, Flip It. I'm glad you're listening, bud. You're welcome to contact me. I will give you some advice. I promise you. Anything that I do in the WhatsApp line is free, gratis, and for nothing. It's normally voice notes or type. If you want a consultation, then we talk about the consultation fee. What do I think about taking a will with the bank? Lindor, once again, banks, insurance companies, anybody can do a will for you. The important thing is that you should have a will. Based on my experience with a couple of clients whose wills were with bank and handling their estates through the banks, it was a bloody nightmare. I battled my backside off, almost said a nasty word, to get it done, the cost implications, everything. So personally, in my company, we do all wills in-house. I make use of 2 lawyers that I have built up a good relationship over the last 25 years. Much easier, much faster, much more cost effective. But yeah, nothing wrong with the bank. Go with them. I just don't like dealing with them when it comes to wills. It's a nightmare. It's just really, it's difficult. Christian, what do you think about the pension fund Alexander Forbes has? Christian, it's not about their pension fund. It's about the underlying portfolio. Alexander Forbes is a great pension fund administrator. But how good that specific pension fund is depends on the portfolios that's used inside. So administrator, great. Whether the fund is actually doing well, I can't tell you because it depends on which portfolio it is. And that, ladies and gents, I think is that. I have just gone over my time substantially. And Aileen says, don't do it, my bank. Take 3.5% of my pension fund. Damn scam. Yeah, you see, Aileen, they can take 3.5%, but like I say, I only take 1%. That's why you should talk to me. Folks, all the best. Thank you very much for a spectacular evening. I love doing this with you guys. Next week, Wednesday, 6 to 7, we do it again. Have a spectacular evening. All the best. Bye-bye.